It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value, on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GLOPAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICI to attend and participate in the first ever GLOPAC.
ICAI is geared up to welcome delegates from across the globe at the GLOPAC.
Good morning, one and all. On behalf of Institute of Chartered Accountants of India from Committee on Public and Government Financial Management, I welcome you all to the series of virtual conclave on accounting reforms in government being organized by the committee under the Azadi Ka Amrit Mahotsav. The topic for today's webinar is what role can accounting standards play for government in promoting transparency? The eminent faculty for today's webinar is CA Jayant Gokhale sir. The viewers can ask their respective questions in chat box and members can claim 2 unstructured CPERs at conclusion of this webinar. As we all know, accounting standards ensures uniformity in preparation and presentation of financial statements, thereby further enhancing transparency, which is a must needed pillar in government sector due to involvement of huge funds. Now, few words about Jayant Gokhale sir. CA Jayant Gokhale is a BCom, FCA and LLB. He is presently independent director of PTC India Limited and a mutual fund trustee company. He is also a member of the committee of RBI, IRDAI and ICAI. He is a founder partner of Gokhale and Sathe Chartered Accountants Mumbai. Since 1982, he was head of the audit vertical of the firm. In that capacity, he has handled central statutory audit of PSU banks and listed companies. He has also been the internal auditor of corporates, BCCI, and advisor to Mumbai Cricket Association. He was an elected Central Council member of ICAI from past 12 years. He has also been the chairman and vice chairman of various committees of ICAI. Sir, with your rich experience, I would request you to kindly start the session.
Okay, thank you. So, just to facilitate the discussion, I have prepared a PPT. I'll just share that on screen. Yeah, I think the screen share is on and I will go further. Is there anybody from the committee or the institute who is going to come at the end, just so that I structure my talk to the presentation accordingly? Okay, so I'll move ahead. So far as the members participating, I would request that any questions that you have, since this should be more in the nature of a discussion, if anybody has any questions, any doubts, any issues, please feel free to put it in the chat box. I'll keep a watch on that and any questions that are addressed there, I will try to answer straight away. And they could be, of course, in Hindi or Marathi, whatever way you feel comfortable. I mean, sorry, Hindi and English. I'm sorry, I'm also accustomed to speaking to officers in Maharashtra. So, therefore, that Marathi word came in easily since it is my mother tongue. Okay. So let's basically what we are going to be discussing today is the role that accounting standards will play in promoting transparency. As you are all aware, ICAI has taken a lot of initiative, especially over the last few years, in trying to convince the various top officials in the ministry to embark on this program, because until this framework and entire structure is adopted, we will not be able to see a lot of progress in this in a harmonized manner. Not that we are not making progress. I may say that the Indian government accounting, both in the states and the center, is definitely showing remarkable improvement as we become a global economic powerhouse. And in that, let's try to see how we can work jointly together in this, and also try to see how best these mutually supporting objectives can be achieved. So the first question that would arise in the mind of any viewer would be that government has been functioning for so many years. Now we are in the Amrit Kal period of the government after our country has become independent. And why this sudden awareness or enhanced awareness about transparency? So let me just give you a couple of quotes which I believe are very relevant to why this whole thrust of transparency is. And that will give you a perspective as to what we are actually trying to put forth. So, hello? Is the my image seems to have frozen. Can somebody put up in the chat box, are you getting my image and the screen share properly?
यस सर, आपकी स्क्रीन भी आ रही है और आपका भी बैकग्राउंड वगैरह सब आ रहा है.
Acha, because my screen, at least on my this thing, is frozen. But anyway, so in case there is something, please put it on the chat box or message me. So as I was mentioning, so far as the need for transparency, I would draw attention first and foremost. If you see our finance minister's statements, there have been many, but for want of space, I have taken only one such quotation from the National Monetization Pipeline. 1 minute, madam. I think there is a problem with my program. I'll have to log out and log in again. I'm opening my PPT once again. So, yeah, so I think now the screen sharing is also on. And so I was mentioning that I have taken just one quote from Madam Nirmala Sitharaman's speech. And the reason for that being that basically she has cited this on various occasions, but all of those issues are repeated at various places. The basic outlook that the government has towards this matter is that, as she has said, the government is encouraging urban local bodies to monetize their surplus and underutilized assets. So basically, the process of monetization, as all of us, either as CAs or in government employment, will understand, that monetization means that if you want to take benefit of something, if we want to take benefit of the monetization or raising funds independently, because various budgets, she has been making a statement that the central government does not have the monetary resources to keep financing local bodies indefinitely. And therefore, the onus is being put on the state governments and the local bodies to raise their own funds. And that is going to be necessary for creating the infrastructure and improving the service delivery. So that is what her statement is. But also, let's look at what Niti Aayog, the senior most people, are mentioning. So one of the crucial aspects of implementing a strong fiscal management is the mode of accounting used for transactions at municipal level. That is Mr. Suman Beri, who is the vice chairperson of Niti Aayog. He has said, if you see the second bullet that is displayed on the screen, he has further mentioned it is important to realize that the quality of information with regard to these transactions plays a critical role in enabling decision makers to take conversant decisions. So what he is mentioning is that if you want good decision making at the local level, you have to provide necessary inputs in terms of financial data. And that is where the need will arise. And if you see immediately thereafter, the CEO of Niti Aayog, he has also said that quality and clarity of fiscal information available to decision-making authorities, what accounting is expected to provide. In order to make informed decisions regarding city finances, stakeholders need to have access to superior fiscal information. That is what Mr. Parmeshwaran Iyer, he is the CEO of Niti Aayog. Now, why is it important? Because Niti Aayog ultimately decides on how various issues are going to be financed, in the sense that most of the funds today, although ideally local bodies should be self-financing, in reality, local bodies' major projects are being financed either through borrowings through major banking channels, or through Niti Aayog, or through state government devolvement of certain grants, etc. Therefore, if one is to go for any sort of fiscal support, if one is to go for any monetary monetization of your financial assets and so on, all that would require a sound information that is flowing in. And that is why the need for this transparency has, in the recent past, significantly escalated. So let's look at what are the issues that will be looking at the the various aspects that will come to the fore when one is discussing these points. So, having said this, let's look at the next slide. So, as one must understand, why is one looking at accounting standards? Is there not a simpler thing that we can have straight away in the current setup that can be implemented without getting into this complex situation of accounting standards? Whether they are complex or not, we will come to subsequently. But one has to understand that we are talking of a sabka saath, sabka vikas sort of situation, where we have to look at the progress not just of bodies such as Mumbai or Bangalore or Chennai. We have to look at progress across the board in all local bodies, whether they are in Tripura, Meghalaya, or in Kerala. In all these situations, there are certain structural limitations that result in some degree of disunity or dissonance, if I may use that word. So what happens is that because of the structure as per the constitution, the state local bodies are falling under the governance of the state government and not of the union government. So although there is a certain master plan that the Ministry of Urban Affairs has, there is certain financing which is being done by the Ministry of Urban Affairs through various schemes, whether it is the JNNERM mission or various other schemes that are being sponsored by Niti Aayog. All that comes through way of devolvement of funds through the central bodies. How they will report and so on. Now, each state has got different rules and laws applicable to municipal corporation, municipal bodies, municipal councils, and so on. So what happens is that while there is a broad framework, there are numerous different requirements, starting from whether accrual accounting is to be applied or not, although this is a decision that has been taken long ago. Whether that can be applied uniformly is a matter that has been decided, although central government has dictated that, but not all states have responded. In the sense, if I remember correctly, there are about 20 odd states which have actually brought in subsequent accounting manuals or rules or chart of accounts or codes pursuant to the requirement for setting up accrual based accounting. Not all of them have actually started implementing it in the same manner, although many of them claim कि हमने ये शुरू कर दिया है. In fact, the implementation at the ground level is not all that satisfactory, and to that extent, this disharmony creates a situation where if you follow, each state were to follow differently, then there is a difficulty at the central level for judging that. And I will come to that aspect when we are talking of the later points on this, later bullet points in this. As a result, accounting rules can be different. So just to give you an example, that means accounting rules being different, somebody will say, okay, accrual means everybody is on accrual. But within accrual also, there are numerous policies. So whether it is on cash basis or whether it is on accrual basis, I'll give you a simple example. And these are examples that are there at all sorts of, that is class A, class B, class C cities. Take a thing like parking contracts. You know, there are what in North India is often referred to as parking ka theka. So you will have this in numerous bodies, whether it is in smaller bodies like maybe Mussoorie, or you will have them in very large cities like Delhi and Calcutta and Chennai, Mumbai, of course. So what happens is you may give contract for parking, or you may take contracts for holdings on the bridges or roads. So these are two very major sources of revenue for local bodies. Now there are different ways in which it can be done. Say for example, parking we will take because it's a much simpler situation and it applies across the board. So either you can give out a contract for parking to a contractor and he will collect the parking charges and pay monthly a certain percentage, which is a sort of PPP sort of a project. Or you can auction the entire rights for maybe 1 year or 3 years. So let's say that parking rights outside the main square in, say, Mussoorie is auctioned at, let's say, 1 crore rupees for simplicity's sake per year. And somebody takes over that contract. Now, even within accrual, there can be differences of treatment because the conditions say that the money received is not refundable. That means, in any case, if the person fails to operate the contract, he is required to deposit, let's say, 1 crore rupees in advance and give bank guarantee for the next 2 years, and the money is under no circumstances refundable. Now, let's say this contract is floated or awarded in January. So, accrual basis would say that you will account for 3 months in this year and 9 months in the next year. But since the money is not refundable, what policy you will follow, that whether you will take entire figure upfront as certain, if you are going to go for elections, you might want to show a better picture. You might want to front end the entire revenue recognition. All these issues can result in distortion. So let's say Mussoorie may adopt a different method, Bombay may adopt a different method, Bangalore may adopt a different method. Now, all these lead to disharmony. And why does this become important? Why does this result in non-transparent situation? Because due to the timing of elections, due to various policies being built around what the decision makers, that is members who are elected councillors, etc., would want to project, there is a difference in terms of how they would want to put this. There is also a reluctance to actually go for the necessary transparency. And what is the consequence of that? That because the implementation of accounting reforms in terms of accrual accounting are also not uniform across the country, you will get different sort of results in different local bodies, and that can itself result in a difficulty for whom, for the Niti Aayog and for the Ministry of Urban Affairs when they are evaluating the performance. Because after all, what is the benchmark? One is quantitative figures. You will ask that what projects did you undertake, how many were implemented, outcome budgeting is now becoming more popular, and so on. But these result in dissimilar treatments, which make it difficult for, say, Niti Aayog to decide that how much is the grant that you should be giving. So if you are accounting for upfront, then perhaps you may not look in so much deficit. This may be politically expedient, but may result in a lower allocation for the future, where the current political establishment may be feeling ki theek hai, election, once we win the next election, we'll see what is to be done. But right now, let us present a more rosy picture of the situation. Somebody else in a different local body may say that, no, we are going as per strict accounting norms, and we will recognize only 3 months and defer over a period of 36 months the entire income of 3 crores. So all this happens in various contracts, and these are actual ground level contracts that one is talking of. These are not theoretical or aspirational things that one is speaking of. So these are some very fundamental examples which result in difference, which can result in, and even whether you are under accrual or even cash basis. In cash basis also, there can be different methods of accounting because you have received only 1 crore. You have got bank guarantees of 2 more crores. Whether you will account for 1 crore or 3 crores, again, there can be a difference even in cash method of accounting. So there are different approaches to these things, which will result in vastly different presentation of the financial statement. Further to complicate it, in various states, the chart of accounts have not been revised for accrual. Even where they are not revised and they are on cash basis, the chart of accounts are not always identical, because while CNAG has mandated that ideally the state government should follow certain principles in deriving their chart of accounts, so their budgetary coding, etc., is by and large in a broadly harmonious framework. It is not exactly the same. And therefore, once again, there can be differences in presentation, especially about what is being capitalized, what is not being capitalized. So all these result in, and why is this not remediable by the Union Ministry? Because fundamentally, these matters fall within the rights of the state, and therefore the state, each state makes laws. I presume that it is always for the benefit of the people, but the requirements of the people, the state of advancement of the economy. So what may be good in Assam, Meghalaya, Tripura, etc., may not necessarily be the same requirement in Andhra Pradesh, Telangana, Karnataka. Therefore, because they are at different stages of development, and therefore these states cannot be compelled to fit in a straitjacket. So one cap, one hat suits all concept may not be necessarily correct, and therefore the ministry has not enforced it. And yet, when Niti Aayog or the Ministry of Urban Affairs is dispensing certain benefits across states, there is always a clamor, there is always a requirement that they should be more equitable and more considerate in their disbursements. Now, these two are conflicting requirements, and therefore, the decision makers at the senior level, at the central ministry, at the Niti Aayog, would want comparable figures. And given the constitutional limitation, you cannot put a comparable figure unless you've got certain common rules in place. And therefore, in order to overcome this dilemma, not trying to change the constitutional requirement, which I think is a very good provision, because we are ultimately a federation of states. So therefore, while not touching the constitutional requirement, is it possible to move to a harmonious pattern of reporting, at least so far as the union ministry is concerned, so that those who are more needing the resources will be provided the resources by Niti Aayog and by the Ministry of Urban Affairs and various central government schemes, etc., which are, after all, being financed out of the monies raised from all the states, from all citizens of the country. So this becomes a very important reasoning why there needs to be harmony in this presentation, and that harmony can be brought about by bringing in both the transparency and underlying that the standardization. And how does one bring in standardization? The answer is very clear that standardization can be brought about only by implementation of some common norms, which is what the accounting standards are. So what steps have the ministry and CNAG and the Niti Aayog, etc., taken? They have taken a few steps which are in that direction. They have first of all mandated, that means pursuant to the Supreme Court decision that came long back in, I think 2012 or so, or even earlier than that, 2008, that accrual system of accounting is to be implemented, and thereafter central government took a view that it has to be implemented from the third tier of government. That means all local bodies, Panchayati Raj institutions, etc., are required to go by the concept of accrual accounting. Now, that puts a requirement on the states, but we will come to that. So, one step taken is that accrual accounting has been mandated. Now, whether it is implemented, not implemented, we will take a look at that subsequently. What Niti Aayog has done, in order to supplement the above, because you cannot use the stick for all state governments. You may mandate something, and if you don't do that, what can central government do? They can theoretically say that, okay, we will not finance you at all. But that is not practical for the reason that ultimately it is the common citizens who would suffer. And as urbanization is gathering pace in India, you cannot afford to ignore the needs of citizens staying in urban areas which are covered by urban local bodies. Therefore, the method is not to use the stick, but to use the carrot. And that is precisely what Niti Aayog has done. What Niti Aayog has done is that they have put in certain incentives that if you are complying with these norms, what are those norms? That is, if you have switched over to accrual accounting, then you will be given certain incremental benefits in terms of allocation of grants and resources. So that becomes an important incentive for various state governments to also try and comply with this. So within state governments, I know Maharashtra, since I'm based there, not everybody is compliant. Good number are compliant. Some are partially or in theory compliant, but not really so. And some are actually totally lagging. Okay, there are a couple of questions. Yeah, one is, of course, I have already done it full screen. There are opportunities for CAs, then that is effective. Okay, I'll come to the accounting standards which are effective. I'll come to that. But before I go to that, let me come to these points. I will deal with that. The questions raised in the chat box, I will come to slightly as we go in the flow of this. So, not only has Niti Aayog emphasized this, ultimately who oversees the compliance aspect of all these accounts is the CNAG, which is again the central authority. They implement the audits through local fund auditors in various states. they have been emphasizing, and the central government through CNAG has set up a GASAB, that is Government Accounting Standards Board, in which ICAI president and certain technical advisors are also members stroke invitees in that. And even for cash basis of accounting, that means even if you have not fully complied with the requirement of accrual accounting, the GASAB has also prescribed cash-based standards, which are also being encouraged in the sense, okay, if you have not switched for various structural and operational reasons to accrual-based accounting, at least comply with the GASAB. So GASAB prescribes certain cash-based standards. So as a result, you will see that the whole approach is to try and streamline everything into a standard set of rules, which it cannot mandate directly because of the constitutional provisions, but through operational methodologies, they are trying to bring this in. The question that was raised in the chat box, I suppose everybody is able to see it. One is, what are the opportunities? Well, that's a big talk by itself. According to me, there are huge opportunities because all this will require a fairly good knowledge of accounting, not just accounting standards, of basic accounting theory. That is why Institute has started a course on certificate course on government accounting, which covers all of this, because unfortunately the CA syllabus does not cover most of this. And what I have learned, for example, is not what I learned in my CA, but what I picked up in practice. So the institute is taking steps. Opportunities are enormous. The question is whether we are capable of utilizing those opportunities. So that is the first aspect that was asked in the chat box. And insofar as the accounting standards which are prescribed, I will come to that as we go along, because we will see how the progress is being made and we will address that aspect. So having said about the incentivization by NITI Aayog, so first is the mandating of accrual accounting by the Union Ministry, the central government. Then NITI Aayog incentivizing, CNAG giving a prod saying that at least do the GASAB compliance. If you're not, our reports will make an adverse comment. Either you follow GASAB or you follow accrual accounting. Similarly, chart of accounts, though the central government does not have the authority to prescribe chart of accounts. Give me a moment. For all the state governments, the chart of accounts, an indicative chart of accounts has been put in the National Municipal Accounting Manual, or NMAM as it is referred to in the bullet. So that by and large, I can tell you that I have seen almost 20 odd states which have brought in, and I think almost all of them are in harmony with the chart of accounts brought in by the NMAM. And NMAM chart of accounts is by and large structured on the lines that CNAG's chart of accounts for Union of India is. So therefore, gradually we are moving towards harmonization of the chart of account structure. I'm not saying the heads. Heads are still different in various states. Various heads are there. But by and large, the structure is being streamlined so that when we are through the computer, which almost every state now is, we will have some method of aggregation of data in a much more convenient and system-based manner rather than manual-driven or Excel-based. So that is one further step that is taken to address this issue. Now we are talking of transparency, but these are the building blocks of transparency. I'm trying to show you that when one is talking of transparency and accounting standards, it does not happen. Accounting standards is not a magic wand. There are accounting standards, we'll come to that. But you can't, it's like saying that I want to become a doctor, so leave aside studying SSC, etc., or graduation. I straight away want to become a doctor because that is what my ambition is. But you can't become a doctor unless you have mastered the fundamental skills. Somebody will say, why do you need to understand mathematics in school or 11th standard if you ultimately want to become a doctor? Answer is that you must clear all the criteria necessary for pre-graduate studies, then graduate studies, then only you can go on to go for medical studies. So similarly, if you want to go to accounting standards or you want to go towards transparency, one level below transparency and uniform accounting presentations is accounting standards. And before accounting standards comes in, you have to go to the building blocks, that who will implement, who will absorb, who will apply. And that is why we are looking at the building blocks. So I have referred to the building blocks in this slide. These are very important. And therefore, the GASAP, the chart of accounts, the incentivization, the accrual accounting mandate, and so on, these are all part of the larger scheme of things. So don't jump straight to transparency and accounting standards. These are the things that need to be built in before you can go to the concept of accounting standards. So I have touched, therefore, the first four bullets, and let me then touch upon the last. That it is not that we are operating in an isolated situation. That means while I am mentioning, and this I again emphasize, the Union Ministry, Ministry of Urban Affairs, does not have the authority to impose either its own rules or the accounting standards to the various local bodies in various states. That is not constitutionally permitted. However, there is nothing that stops the Union Ministry from playing a support role. And there are two ways. As I said, it is a carrot and stick situation. The Union Ministry prescribes certain targets. If you are going towards that, they incentivize you by increasing your level of subsidies, grants, etc. If you don't, then although the grants are not cut off, they may be at a lower stage in order to incentivize you to move towards that. Similarly, this is not the only way. As I said, there are a number of building blocks. In consultation with the ICAI, and here I would draw attention and answer that second query raised in the chat box, that what has been done by the ICAI. So ICAI has long back, when I was a member of the council, perhaps I was a member till 12, 13 years back, but maybe around 20 years ago, the institute started this committee of accounting standards for local bodies. Now it has become accounting standards. It has become the committee for public finance and government accounting, and various other areas are covered within that. So this committee has taken up the task of framing accounting standards, and we have brought out a whole lot of accounting standards for local bodies, which are based on the IPSAS, that is International Public Sector Accounting Standards, and they have got a whole set. But like in the case of IFRS to Ind AS, we have taken a view that we should not go for whole hog or entire adoption of IPSAS, because all those situations are not necessarily prevalent in India. So what we have done is that we have made presentations to the ministry, and mind you, the very positive role played by the Ministry of Urban Affairs in this is that after listening to the technical presentations made by the committee of the ICAI, they have granted approval and circulated to various state governments saying that the following standards have been approved for implementation by the Ministry of Urban Affairs. So while they can say that they are approved for implementation, that's a guidance to the state government that they may apply them. They cannot direct that they be implemented, and that's why very cautiously, in keeping with the constitutional framework, the ministry has been acting in support of implementation of the accounting standards. So that is broadly what we are looking at. So it is not as if the institute is bringing out standards which have no relevance to actual application. This has actually been implemented in significant measure at the national level. The technical authorization and support has been granted by the Ministry of Urban Affairs, but for it to be actually implemented, it has to go down to the state level. So let's see how this is progressing. So these, as I said, are the building blocks that are essential. So is there, if I were to assess independently, I have been associated with this process, and I may draw your attention, there is a publication brought out by ICAI in January 2023, by this committee working in conjunction with Niti Aayog, which is there on the website of the committee, the implementation study that has been done in various states, and they have given a very detailed study of where we have progressed. So let me say frankly, while we are not if I were to rank on a scale of 1 to 10, while some states may be at the level of 7 or 8, some states are at the level of 3 and 4, they have not responded also. But by and large, we are at a fairly good level and are continuously progressing in that direction. So let's see what else needs to be done. So, as I said, since these are prerequisites, there is nothing disappointing. It is a step along the right path. We are moving in that direction. We are not stagnant, but lot needs to be done. So, having said all this, why accounting standards? So, fundamentally, we looked at transparency. We looked at comparability because these are the requirements that one has to sort of make sure that one is actually, these are the requirements that one has to meet. Transparency, comparability, in order for the decision makers to have a clear view. So what role does accounting standards play? We are looking to that. And let's understand, what does accounting standard do? So why accounting standard? There can be any sort of remedy that is possible to make it comparable. But as experience has shown that accounting standards provides the most convenient, most well-documented, most systematic solution to the problem at hand. So what do all these standards basically contain? They contain basically, as all of you, many of you are CAs, some of you are not, because this, I believe, some government employees also would be part of this. So accounting standards, let me just touch upon, are basically containing always a scope and definition clause, which will say that, okay, the definition of various items that are being dealt with in the standard, whether it is items of revenue, expense, assets, liabilities, all those items are defined so that you have a clear picture as to what exactly is covered by that standard. So when you are wanting to bring in comparability, transparency, you must first understand that you are all, that means if I am sitting in Maharashtra, you are sitting in New Delhi, and somebody else is sitting in Karnataka, we are all referring to the same thing in the same manner at the same time. So that is an essential requirement. So that becomes the first. Then we go to the second. That is, there is always a clause regarding what you are going to recognize. That means what constitutes, let us say, income, what constitutes an asset. Not just the definition, but how do you bring it on board? That means suppose I place an order for a vehicle before 31st March. I make full payment for that because the supplier is going to give me. Say on 20th of March, I have got a budget available in a local body to purchase a vehicle. So I issue a demand draft in favor of the dealer. What is required is, let's say, a Maruti van, which is, say, white in color. The dealer says, sir, white is not in stock. I will supply it as soon as it comes. It will come in a week. 31st March goes by, you don't get the delivery, but perhaps you get it on 4th of April or 5th of April. Do you recognize it as a vehicle on 31st March, or do you recognize it in the next year? So point of recognition. Somebody in Karnataka will follow one method, somebody in Maharashtra will follow a different method. If you follow different methods, your utilization of funds will show differently. But if you follow a standard which is prescribing when you recognize it, then that, including the timing of recognition and when you recognize it, preconditions for recognition, that is what is prescribed in the standard. So you will come to comparability and transparency. Then the third point is measurement. Just to take our example forward, suppose in that vehicle it is offered that you will get insurance for 1 year included in the price. Somebody in Karnataka says, no, insurance is to be paid for separately. But if you buy 3 years insurance, you will get a concession. Does the insurance component form a cost of the vehicle or does it not? Measurement. So I purchase the car for, let's say, 6 lakhs and my insurance comes to, let us say, 30,000 rupees. So is my cost of the vehicle 6,30,000 or 6 lakh? Maharashtra and Karnataka cannot account for it differently, because when you go for multiplier effects, you have purchased numerous vehicles during the year, you have purchased larger earth moving equipment, etc. These problems actually escalate. And I'm taking the simplest of examples only to save time. The same issues can come for building, constructions, bridges, flyovers, which are running into crores of rupees. Therefore, the timing and the manner of recognition, the measurement, that means 6 lakhs or 6,30,000, and then finally your disclosure of how you are actually taking a step towards recognition. So let us say Maharashtra and Karnataka, two local bodies, follow different methods of disclosure, both of which are permitted. Is it possible for the reader to understand what is the impact that you are giving? So can somebody sitting in Niti Aayog say that, okay, in Maharashtra, for recognition of the metro rail expenses, they have taken A, B, C, D items, but in Karnataka, they have taken only A, B, C, and D has been expensed off. It makes a significant difference, because otherwise it could happen that for identical metro rail projects, the union government grant for this, Maharashtra may end up getting 15 crores and Karnataka may end up getting 12 crores, because they are following a different method of accounting. And if there is lack of transparency, they cannot claim that we had already told you, because there is no disclosure. So accounting standards are prescribing fundamentally for all these items. And therefore, when you have got a ready-made solution, it makes sense to try and adopt that ready-made solution rather than try to go for something which is more, not experimented with. And accounting standards have been around for a long, long period of time. We'll touch upon some of them, but basically accounting standards have been actually looked at in a very structured manner. They've got international recognition. They are thought through by various experts. So there is no reason that when you have got something available, why look for other solutions when accounting standards are there to support you? And most importantly, and this is something which, especially if there are government employees attending, I think this needs to be very, very strongly emphasized, that it is not a question of accounting standards being complex, because this is one of the complaints that comes. If you understand Indian standards, whether it is for corporates or local bodies or government accounting, they are all principle based. So it is not as if there is a rule that if this happens, do this. In many local, NMAM fortunately also follows the same methodology, and it has got the blessings of the Union Ministry for Urban Affairs, because it is there on the website of the Ministry of Urban Affairs, the NMAM, which was brought out much, much earlier. But basically, it is a principle-based solution. Now, what is the advantage? Each state, if it were to make rules, and some states have made rules, that, for example, in depreciation, Maharashtra prescribes that depreciation will be provided on a straight line method. Uttarakhand manual prescribes that it will be provided on written down value method. Different methods of accounting will result in different amortization, different expense write-offs, and so on. So, one moment, one urgent message has come. I need to just check. Okay. So, all these solutions, certain states have got certain rules. That itself results in certain differences. But the standards per se are giving broad solutions which are principle based. So, therefore, there is, and while there is a difference in depreciation, the standards themselves prescribe, and there, fortunately, both the Maharashtra manual and the Uttarakhand manual, which prescribe different rules, also prescribed that the methodology must be disclosed in the notes to account. Therefore, it is very much possible for a person sitting at Niti Aayog to understand that, okay, in Maharashtra, in the initial years, as you are having a higher investment, the depreciation will be lower because it is straight line. Whereas in Uttarakhand, for example, where written down value method is prescribed, the depreciation in the initial years will be higher because that is how WDV operates. So, so basically, principle-based solutions are given in accounting standards, and that is why, rather than looking for new solutions when a solution is available, there is no sense in searching in the market when you have got something sitting at your house. So this is the solution that is available. Accounting standards are there. They have been around for many years. They have been internationally tested. They have been approved by the Ministry of Urban Affairs. Some of them, not all. Having done that, there is no point in looking elsewhere, and therefore that is the norm that has to be adopted for compliance. That is the simple takeaway that I can give, that when you are looking at it dispassionately, there is no question of ego or promotion of institute, as many people in government sometimes think that this is intended to promote, make things difficult for everybody else in government and promote the interest of chartered accountants. That is not so. In fact, chartered accountants, the government has created enough opportunities in tax and other legislation, GST, indirect tax, direct tax, and audits, that CAs don't need to look at this as an avenue for promoting themselves, although there are definitely opportunities, because as we are becoming economically stronger, we are going to require more organized, principled methodologies, which is what we are looking at. Also, this is something that I need to point out, and this is perhaps what one of the questions indirectly indicated, that accounting standards do not exist in a vacuum. It is not as if, the 10 commandments were issued or the rules of whatever we call as the rules given by Manu for conduct, all those, or the code of Hammurabi. These are codified rules which are absolute, but there is always a reference point to it. And what is the reference point? That you will not have accounting standards floating in a vacuum. The accounting standards are based on certain things. They are supported by a certain framework, and that is important to understand. So when one talks of adopting accounting standard, it is implicit. It goes, that means it's a package deal, that you will adopt also the framework. Now, why is the framework important? The framework is prescribing the overall. That means accounting standards can't provide a remedy for everything. It's like going to a doctor. And if you go to the doctor will possibly examine you, and you say that, okay, I get frequent bouts of headache, or I get some nausea, or I get, my heart rate increases. Different persons, of course. The doctor will prescribe you certain medicines based on what your grievance or complaint is. So accounting standards are there to address specific situations. However, it goes without saying that if you say that doctor never told me that I should sleep every day, or doctor never told me that I should drink enough water, these are fundamentals. So you don't require to be told that. It is taken for granted, although sometimes doctors do advise because people don't recognize fundamentals. So similarly, while accounting standards are there to give you the explanation for certain specific situations, they operate in a basic framework. So if you say that I don't sleep at all, or if you say that I am extremely cautious about fitness, so I run 10 miles every day and don't eat till 4 o'clock in the afternoon. Now that is destroying your body. It's burning you, not just calories, it's burning up your body. So there is a framework within which one has to operate. One can certainly run 10 miles. There are marathon trainees who run even more. But then they follow a proper regimen of diet. So they are operating within a certain framework. For accounting standards also, There is a framework, which is a written framework, which will come along with the accounting standard. So if you see the bullets will explain that what is it that the framework prescribes. So first and foremost, the framework prescribes that it has to be applied only to material items. Now, although CAs will know all this, sometimes a revision is necessary. So don't try to apply accounting standards in the spirit of transparency. नहीं, हर पैसे का accounting दिखाना चाहिए. It's not important. Materiality requires that if my total budget is 1,500 crores, my materiality limit may be 1 crore and less might not be so relevant. So therefore, if you see the materiality level, it has to be with reference to that. So if you spend your time needlessly devoting time to some 200 rupees and 300 rupees when your expenditure is 1,500 crores, it doesn't make sense. But yes, in a Panchayati Raj institution where your total expenditure is maybe 20 lakhs in the year, so in a monthly basis, your expenditure of 500 or 700 on, say, transportation could be important. So the framework includes points in regard to materiality. It includes aspects relating to reliability of the accounts. That means what are the checks and balances that are built in to make sure that the figures that you are talking of are reliable. They are not just off the hat, so to say, out of the hat. They are actually reliable. They actually represent faithfully what is the ground reality. These are things which are prescribed in the framework. So sometimes the legal situation and the reality are something slightly different, as happens in the case of leases, as happens in the case of certain transactions. So faithful representation, how to arrive at a faithful representation, is something that is prescribed not by way of a rule, but by way of a prescription that these are the essentials, that you must represent a true and fair view. So that faithful representation is there, coupled with substance over form. So therefore, legally, for example, if a car is involved in a crash, the insurer steps into the place of the owner. So can you say that I have sold the car? Answer is no. You are still the owner of a car that is damaged, significantly damaged. Perhaps its resale value is very, very low. Technically, the insurer has the ability to say, okay, your insurance value is say 3 lakh rupees. So take the 3 lakhs, scrap value jo milega is mine. So he takes the car away and sells. Does that mean that you have already sold the moment you lodged your insurance claim? No, substance over form means that you are still the owner. Technically, he may acquire rights of substitution of ownership. However, since that right has not been legally exercised, etc., substance over form will prevail. So these are concepts which are prescribed in the framework, which will be of guidance. And please do not imagine that this is something that happens only in theory. These are actual problems that we have encountered in implementing accounting standards in local bodies. So thankfully, I've had a lot of experience in that aspect. These are actual problems that we have encountered. These are not theoretical issues which are there only for a lecture. Then there is the issue of completeness. So if you project a certain transaction as an incomplete transaction, the details of that need to be given. For example, if I have booked a flat, I'm giving a simple personal example, not with, or even a local body might have booked a office premises. Let's say we have paid 50 lakh rupees towards booking. The fact that as the construction has progressed, and let us say by the time that the balance sheet is drawn up, say in 3 months, that means by June, the balance sheet is being drawn up. A substantial part of the construction is done, and you are liable to pay a further 2 crore rupees to actually, your aggregate price is say 4 crore rupees. So by June itself, your obligation to pay 2.5 crore rupees has arisen. You have paid only 50 lakhs. The completeness of the transaction must be exhibited. How it is done is through the notes where you say that you have got a committed liability to acquire that asset. You can't back out now because you have already made payment of 50 lakh rupees. So all that is part of completeness. So you can't just say advance for office purchase 50 lakhs. There is an incidental story to it which needs to be told for it to be giving a complete picture. And that picture you have to provide. That is what the framework prescribes. So that is again where framework steps in. Then the concept of prudence that is dealt with in the framework, that is also coming in. That if you have got the choice, that means prudence and conservatism are often interlinked. If you have got a choice, don't be over optimistic about booking revenues or booking assets, because until something actually happens, it is prudent not to sort of pre-estimate or book in anticipation or recognize in anticipation. So prudence is a concept that is more explained in detail in the framework. Of course, it is one of the fundamental concepts in applying accounting standards, but we are still discussing whether accounting standards are so necessary for ensuring transparency, and therefore these are the concepts that you will refer to in the framework. So when you go for accounting standards come as a package deal along with the framework, and framework gives all this. So this is not given in any of the standards per se, but it is given in the framework. And I think the framework itself has been approved by the Ministry of Urban Affairs in the presentation that was made to them long ago. So this concept, and then finally comparability, because that is ultimately the bottom line of what one is looking at. So why is this all happening? As I said, I gave you the quotes from Niti Aayog and from Finance Minister, and of course even Prime Minister has spoken about it, that you have to have independent entities looking at your financial statements, and that itself means that those independent entities must be able to compare that is Bombay better or Bangalore better, or is maybe Kota or maybe Meerut, they could be better than some of these larger cities because their financial situation may be better. So it all depends. And therefore, the comparability has to be ensured, and framework gives one more support in terms of providing how you will ensure comparability. So this is what framework ensures. Then I come to another reference point, that is the preface. The preface to accounting standards also spells out various methodologies, how accounting standards are adopted, etc. And then ASLB 1, Accounting Standard for Local Bodies 1, which deals with, in a significant manner, the disclosure aspect, which unfortunately most government accounts do not deal with in adequate measure. It is only when accrual reforms have started that this aspect has come into consideration. That is not to say that government deliberately hides. In any case, under RTI, you can ask for the information. But in order to make the financial statements, including the budget statement of the Union of India, in order to make it meaningful, you will see that it is preceded by the economic survey, it is supplemented by detailed notes, it is supplemented by explanatory memoranda, and so on. So similarly, financial statements of a local body need to be supported by certain notes, and that is prescribed in ASLB 1. And therefore, ASLB 1 will actually okay, there are a couple of queries which have come up. Let me try and address them as far as possible right now, or maybe towards the end of the lecture. I'll keep some time. One is regarding application cash-based standards, and the other is in regard to disclosure. So I'll deal with that. So we will focus on what ASLB 1, which prescribes for the notes to be given, how that is actually as a indicative thing. And again, this is ready reference available, and why, if you want to achieve transparency, you need to go to the accounting standard, particularly ASLB 1. I'm not even getting into the more detailed standards where accrual might be a mandatory thing. But to give a brief answer to that question, even if you're preparing on cash basis, nothing prevents you from giving explanatory notes. It's just that this is not a practice that has been followed. any good practice, it's like saying that, okay, uh, I have been drinking regularly, I have been drinking excess alcohol. Nothing stops you from reducing your level of consumption or stopping it altogether. It's only your mental state that is the roadblock. So similarly, even if you're following cash basis or accounting, nothing stops you from making a disclosure. The question is, many people who, even IAS officers, etc., they say, but we are following cash basis. So what? The principles are given in ASLB 1. You may not be following accounting standards when you're on cash basis, but some of the good points from there can always be taken up. So there is nothing wrong with that. And that is precisely why I'm drawing attention to ASLB 1, which prescribes how the notes are to be reflected. And that, if I mention, so you disclose in the notes the basis of preparation and the specific accounting policies. So you may disclose that I am following cash basis and what are the specific policies that I do not recognize, say, for example, employee benefits until they are actually paid, and so on. So that would indicate to the reader that that means you have got a possibly a substantial liability. Let's say I've got a municipal body which is, say, 50 years old. Many of my employees are likely to retire in the next 10 years. So I may have substantial gratuity liability, which is not at all reflected in your financial statements. So that could be a disclosure that you could make. Of course, that would not be a disclosure that you may want to make, but then the basis of preparation and the accounting policies followed can be disclosed even in a cash basis. The information which you feel is necessary to be understood by the reader, even though not presented elsewhere in the financial statement. Take, for example, certain, what do they say, assigned revenues. See, state governments, because they want to support local bodies, they may give certain revenues on a stopgap basis. Say in COVID period, they said, okay, we are assigning all revenues arising from, say, GST relating to sale of all pharma products was assigned by the state government to, let's say, the local body where the products were being sold. I'm just giving an example. This is not the actual case. But the fact that these are assigned revenues that could be taken away back because that is entirely at the discretion of the state government, that information needs to be presented because assigned revenues may not constitute a regular source of income. That is granted, but it may not continue. So, therefore, this information is very important to understand in a body which is showing significant, and I can tell you that own revenues in a local body are very rarely over 60% of the aggregate revenue. 60% also is on the higher side. Niti Aayog has published a study which shows that it is in fact very often much lower. It is in the range of 30 to 40%, but 60% let's assume. So balance 40% is coming in through state government subsidies, central government subsidies, assigned revenues. So where a single item of assigned revenues is important, it may require to be suitably disclosed in the notes to accounts, whether you're on cash basis or on mercantile basis or accrual basis. So that is something that you need to pay attention to. Then, of course, any other additional relevant information, I'll not stress upon that in the sense it is for each person who is making the disclosure to decide what is relevant, how certain policies are taken, accounting policies, that's the next bullet. Then supporting items to items presented in the financial statement. So if there is, say, a certain spurt, let's say I have got till last year, say, vehicle tax or tax on vehicles is an item that is granted to the local body. So all vehicles registered in the RTO within your jurisdiction goes to the local body. Let's assume that actually it goes to the state, but let's say it's an assigned revenue and a permanently assigned revenue. If that were the case, then what happens? In a particular year, the state government brings a policy that instead of collecting vehicle tax on a year-to-year basis, we will charge vehicle tax on a lump sum basis, assuming that the vehicle is going to be paying 10 years tax upfront And then, although the vehicle has a life of 15 years, no further tax will be levied. Now, what will happen? Suddenly, in 1 year, last year, my tax collection on, say, vehicle tax was, let's say, 1 crore rupees. This year, suddenly it goes to 11 crore rupees. Does it mean that suddenly my municipal body has become profitable? Answer is no. There are significant items that are needing to be explained because my revenue in the financial statement will go up from 1 crore to 11 crore. But that this is as a result of a certain accounting policy that I am recognizing that upfront. Or you could have a policy saying that I got 11 crores, but I am recognizing it over a period of 10 years. So therefore, I will account for only 1 crore. So this information is critical to understand where you stand on these sort of items. So these are disclosures that you need to make, just as we come to the next item, that is disclosure in regard to contingent liabilities, contractual commitments. Contractual commitments, I already gave you an example of the office booking. Contingent liabilities, somebody has filed a case for unlawful uh, unlawful acquisition of assets, or there can be a compensation clause or non-payment of interest. Various claims can be made against the local body, and those need to be disclosed if you are to understand what is the financial situation. I'll give you one item, for example, in one local body where uh, there was a large airport which was actually on municipal land. There is, in fact. Now, the central government decided that since these airports are to be leased out and through a process of bidding which was conducted by Airport Authority of India, one of the companies in South, GMR, whichever, won the bid. Now, there was some dispute in regard to the payment of taxes on property which was covered on the municipal land. The municipal body insisted that this property tax on that land belongs to us and therefore that should be paid. Whereas the view of the company which had won the contract was that when we are granted this, we are granted a right to use which is absolute and we are not going to pay any other taxes. There is a legal dispute. Matter has been in court for a number of years. The municipal body shows a revenue saying that revenue of say 5 crore rupees a year is due to us as municipal taxes for that. But no revenue has been recovered for 3 years. Now, if you are an accrual, you will show a revenue of 15 crores accrued but not due, that means accrued but not received as your outstanding debtor. Now, should there be a disclosure that this matter is disputed and a case is pending and perhaps even the lower court has decided against you, all this needs to be disclosed, even though you may be right in claiming and your case may go on up to Supreme Court. But these are disclosures, so not just contingent liabilities, all claims in regard to assets that you are showing also need to be disclosed. So all this is a part of the transparency exercise. And how is that supported? While transparency as a general concept is very good, how to give effect to that is what is spelled out in the ASLB 1. And if you go through that checklist of items that require disclosure as per ASLB 1, practically you would have achieved the objective of transparency, which is what we are moving to in this whole discussion that we are having today. So that takes care of the transparency aspect. And therefore, as a risk management policy, like I said, if 15 crores is due to you but not likely to be received in the near future, it makes sense to disclose that or not recognize or to provide. So that is also a part of prudence, which is referred to in the framework. It is also part of the risk management policy of the entity. Now, we understand risk management. I'm sure even non-chartered accountants who are investing, say, in mutual fund, etc., every one of us who is reasonably financially literate understands it. But somehow we do not associate it with government entity financial statements. So nobody expects that there will be a thought given to risk management of, let's say, a tuberculosis eradication fund or a anti-malaria trust that has been set up by a state government or a central government. They have funds. nobody seems to pay attention. Or take metro rail corporations that are there. They are also government corporations. They have huge funds, a lot of them lying in fixed deposit, some of them lying in deposits with banks, which actually should not be, because they are supposed to invest only in scheduled banks or government-owned banks. But sometimes they are tempted by offers from even state apex cooperative banks and so on. And ultimately, that becomes a risk. Somehow, the concept that I invest 50,000 rupees in my mutual fund, I have to take care of risk management, I have to take care of prudence, is understood. But when it comes to government entities, the very same person who is taking care of his 50,000 may not take care of 5 crores, because they do not seem to apply the concept of risk management policy to government entities. That is where a mindset change is required, and that is yet to happen in India, partly because we are not having the right sort of disclosure. So you are not actually having attention being drawn to these aspects in a structured manner. Sometimes somebody thinks over a cup of tea, says, "Arey yaar, ye to dekhna chahiye na ki which company we are keeping deposits, which bank we are keeping deposits with." सिर्फ 10.5% मिल रहा है, इसलिए you can't go to a high risk bank. But when actually formulating that or making a disclosure, all this is not thought through in a structured manner, because there is no structured disclosure. So let's look at what happens when you are having a structured presentation. Now, we are still, means just to keep you on track, we are on the concept of transparency and how accounting standards are an aid to promote transparency. So what is really happening? If you are on a structured presentation, the standards, the framework, the preface, ASLB 1 and various standards actually ensure that you are going on the right track in seeing that a true and fair view is presented. I have already referred to faithful representation. I have already referred to selecting and applying a proper accounting policy which is suited to the circumstances. So again, I cannot say that every accounting policy that Mahanagar Palike of Bangalore will apply is necessarily the same policy that will give a true and fair view of, say, Shillong or Itanagar. Their situation might be entirely different. Therefore, they have to decide which are the appropriate policies. But having decided that, they have to also come to a suitable disclosure and application of those policies on a consistent basis, so as to show a true and fair view of their financial statements. So, and not only show a true and fair view of their financial statements, but through the disclosure made, enable an outsider who is sitting, say, in the office of Niti Aayog to say, okay, let me look at Shillong and let me look at Bangalore Mahanagar Palike. How much do I need to allocate to Shillong? How much do I need to allocate to Bangalore Mahanagar Palike? Both have got, let us say, identical programs of urban afforestation. Who needs more? Who has greater resources? Who has got greater need for that? And so on. So when you compare not just the financial statement, but the underlying policies, the underlying assumptions, that is where a proper evaluation will be possible. And that is why that true and fair view is so important. And that also brings us to how that true and fair view has to be relevant to the facts at hand. It has to be reliable, it has to be comparable, and most important, and last but not the least, it has to be understandable. Very often, a grievance made about accounting standards is that we can't understand them. Now, I do appreciate sometimes the language of the standards is a bit difficult, but let me also tell you, the Institute has a program of trying to simplify the principles given in the standards in a manner that the users of the standards can understand and apply the standards in a more simple way. So at any time, if any government entity actually feels that this is a bit complicated, I'm not saying that we can write books on every item, but any person, especially a government resource, has a problem. I think I can speak for the Institute, although I'm no longer a member of the council, but I'm sure my current colleagues in the council will appreciate and endorse my view that the institute is always willing to help any government body in resolving their problems. After all, the institute had adopted the concept of ICI being partner in nation building. So therefore, any government entity wants, they can always sort of take they can approach the committee, which is at the end of the presentation, their email ID, etc. is given. You can always approach them, see that all these stumbling blocks or roadblocks are overcome. If you have a specific problem, which you feel that that is not resulting in a true and fair presentation, or it is resulting in a problem for fair presentation, always feel free to approach the institute, and institute will be more than willing to help. So this is one of the processes, as I said, in order to go to medical college, you have to go through your primary, secondary, certificate examination, whatever is your school certification examination. Then you have to go to at least intermediate of science, perhaps. You can't possibly take up commerce and then say, I now want to go to medical. Although in USA, something like that is possible, or in Australia, where they believe that all knowledge is fungible. But at least in India, the scheme is that you have to go as per the steps of the ladder. So similarly, when you are wanting to achieve transparency, you have to achieve certain prior benchmarks. And one of the benchmarks, which technically not necessary, but practically it is an essential thing, that you will have to show that. So you will have to show that your adherence to accounting standards has enabled your transparency, true and fair view, etc. Only then you will actually be able to say that my accounts and financial statements are transparent and are understandable by the persons who need to understand them. And who need to understand them, I'll just break into the presentation to say and link you back to the initial point. If you are looking at raising funds from international bodies like Asian Development Bank or BRICS Bank or somebody for certain projects like flyovers or metros, etc., or even in smaller cities, underground drainage. Many of our old cities are having open drainage. That causes supplementary problems such as widespread prevalence of items like malaria and digestive problems like dysentery, diarrhea, etc. All this can be overcome provided you are able to give adequate resources to something like underground drainage, covered drainage. So even parts of Old Delhi or Faridabad, till few years ago, there were certain areas which had open drains. Gradually, all that has been addressed. Similarly, in smaller towns, whether it is Hisar or some of the other places, you will find that some outskirts areas will still have open drainage. So if you want to address that, you may need to borrow funds. You may need to raise funds from development agencies, ADB, BRICS Bank, etc. You may want grants from central government, or you may want to monetize your assets and say that, okay, I want municipal bonds, which is possible, which is not impossible, and which is being encouraged by the finance ministry. So who all looks at it? Bankers, credit rating agencies, chartered accountants who are appointed by any of these agencies, or those who are willing to finance your expansion, and so on. Although this sounds very difficult, you see entities like NHAI which have floated bonds. They are also in the market. You have NHAI bonds which are tradable on the exchanges. So NHAI is financing such a huge, humongous amount of expansion of national highways. They are doing something phenomenal. Almost 35 kilometers a day is being constructed, and they are targeting areas like sort of 13,800 or 15,000 kilometers per year, which is a huge figure. But if you look at that, how have they financed? They finance through issuance of bonds, partly, not entirely. So is it impossible for local bodies to finance through bonds? Answer is no. if you want to finance through bonds, is it necessary to, give me a moment, some messages. Yeah, so is it necessary that, the financing is not a realistic option? Answer is no, it is a realistic option. It is going to come in municipal bodies in the country. It will begin with the larger bodies. Today already Pune, Baroda, Indore, Bangalore, I think few other cities, I think couple of cities in north I'm missing out, have already got issuances of municipal bonds which have been successful. So it is not something which is in theory, which is actually in practice, and various other bodies will be raising funds through municipal bonds. So there, a structured presentation of your financial statement is going to become essential, and therefore it is better to be prepared rather than trying. In Marathi, there is a phrase that you can't dig a well when you feel thirsty, because when you feel thirsty, you require water then. If you start drinking, if you start digging a well at that time, then you are not going to get water in time. Therefore, if you want to structure your financial statements, maybe 5 years down the line, you want to think of taking issuance of municipal bonds to finance your ongoing expenditure of providing good services to citizens. If you want to do that 5 years later, you have to start getting your financial statements ready just now. Only then, after a certain period, you will be able to come to a proper level of accrual, disclosure, application of standards, and transparency, which is essential for all of that. So these are things which you need to bring in. Also, when you look at the various concepts that accounting standard automatically bring in, accrual, of course, is one. We will deal with that when I am answering the query. Going concern, by and large, municipal bodies don't have an issue, but if you want to have that, that has to be explicitly addressed and disclosed. I have already touched upon consistency, materiality, and aggregation. I'll give you a simple example of materiality and aggregation and offsetting, which is all these things are dealt with in standards. So, very simply put, if you say that I am netting off certain items, there are certain rules. You can't, that means take two different municipal bodies. Let's say, to continue the same example that I had given before, let's say I am accounting for parking contracts in two different ways. But let's say for a moment, both are actually accounting for in the same way. But in both cases, in order to award that contract, a certain parking space was actually developed, gates were constructed so that unauthorized entry and exit is prevented. Maybe two levels of parking was created near the market. I have seen in Mumbai, there is a parking lot created at Parel, at Dadar, which is 3 or 4 stories high, which provides adequate parking facilities. Now, if you follow an incorrect policy of saying that I got 3 crores, but against that I constructed the parking lot of 1.5 crores, so my net income is only 1.5 crores. That would be an incorrect netting off. So offsetting is permitted only under certain situations, and therefore, or to take a simpler example, let's say that they appointed me as a consultant for say municipal reform implementation, and I have been paid a fee of, let's say, 36 lakh rupees in a year, and because the municipal body reached a certain standard of accrual accounting reform, they got a grant of, let's say, 50 lakh rupees for incentive for implementation of accounting reform. Can they net off one against the other? Answer is no. The answer is provided in the standard which deals with offsetting. Even ASLB deals with it. Our normal accounting standards issued by the ICI also deal with it. But you should be aware that when materiality becomes a factor, aggregation becomes a factor, and offsetting becomes a factor, all these things are already there. So what they call is that there is no need to reinvent the wheel when the technology of the wheel is already there. You have got wheels which are available. So accounting standard is like a wheel which has already been invented. You don't need to look elsewhere. If you want to have the right nature of transparency, the ideal answer is obviously, I would not even say ideal, the obvious answer is to turn to accounting standards which give all this information in a structured and transparent manner. Yes, it is slightly in complex language because it is in matching with the international code which we are following. However, if you appoint a consultant, and I'm not saying me, at your local level, whoever you appoint, chartered accountants are available at all cities virtually, all urban centers. I'm not even saying A class, B class cities. I'm saying C and even Panchayati Raj institutions. You'll find some CA available in the nearby vicinity. Engage them, see that they are properly trained. Perhaps if they have undergone the certificate course of this committee itself, they would be having the basic information. And based on that, you can have all the requirements that are prescribed in the structure, which includes, of course, I'm not dwelling on that, the comparative information presentation, which incidentally, many of the entities don't properly follow, but comparative information, reporting frequency, etc., all that is built in into that when you follow the standard. So coming more to towards the conclusion, what is it that we are looking to bring in? We are saying that if you want to bring in transparency, you need to turn to some measure that will ensure that there is transparency coupled with consistency, regularity, comparability, etc. So these are the points. So what does the accounting standard bring in? It brings in reliability, because if anybody says that I have followed the ASLB, that means, and the chartered accountant certifies it, that means the ASLB is a certain minimum benchmark. It is not the ultimate, it is the minimum benchmark. You are allowed to go higher, but it is the minimum benchmark that yes, you are there, and therefore I can reliably say that yes, minimum benchmark has been met. Can it be comparable? Again, the answer is yes, if you have followed the accounting standard, although there may be differences between what, let's say, Siliguri and Shillong and Karnataka, that is Bangalore and Hyderabad are presenting. They are made comparable because there is adequate disclosure of the underlying policies. Then third is there a uniformity at least within the state? So Bangalore Mahanagar Palike, Hubli, Dharwad, various other cities in Karnataka, would they have by and large uniform policies? Answer is yes, because the accounting standard will say if you do not follow a uniform policy from what is prescribed in the rules, make a disclosure of it. And then finally, consistency, because you cannot keep changing your accounting policies from year to year unless there are certain prescribed circumstances like change in law, etc. You will have a consistent presentation. So I can give a comparative and say, okay, what has changed? And to take the example of vehicle tax collected in lump sum, if there is a change, then that change will be suitably disclosed in the notes. So it's not that things never change. Things change. The world is a dynamic place. But that does not mean that your statements become non-comparable. They remain comparable provided and consistent, provided you are following the basic norms which are prescribed in the standard. So the standard provides all the solutions practically that are there. They actually help you meet all the challenges which are there in order to ensure transparency. Also, what the standards provide, and this is important, which is sometimes not understood, is that are they comprehensive? If I ask many of you, you're living in cities where various things, like in Mumbai, many of you might be based in Mumbai. If I ask you a question, or even Delhi, Bangalore perhaps, that when I give my statement of the municipal body, does that include the revenue earned from the bus service that the municipal body runs? Or does it include Bombay Suburban Electric Supply? So BEST is also run by the municipal body. That is electric supply and transport. So electric supply and transport. So BEST buses, which you would have heard of. Bangalore has similar buses. You have Green Line buses in Delhi. If I ask you a simple question, that does your local body revenue include that or exclude that, 90% chances are that you would not know. The reason is what constitutes comprehensive is not clearly disclosed and not clearly understood. And therefore, this concept of being comprehensive and understandable and reliable, of course, are things which come in through the adoption of standard which enable a full bird's eye view picture being available. And that in turn is what enhances or enables transparency and enables the right sort of conclusions to be drawn. After all, the biggest input, and I will take you back to the opening statement, that economic decision making, unfortunately, accounts in India are looked at as a compliance issue. Why do you maintain accounts? Because it is mandated either by Companies Act, Trust Act, municipal rules, Government of India rules, because CNAG comes and audits. Nobody actually uses this as a management information tool, which is what all the big companies do. You take all the top companies, their accounts are virtually online, not because they love to have them online, but because those are the data. The financial data is the data based on which economic decisions are taken. Unfortunately, in India, right from colonial times, our economic decisions were taken more in political and colonial objectives, political objectives, and not from an economic sense of what benefits the citizens. That time is now changing. We are living, as has been mentioned, we are living in the Amrutkal situation. We are living in a situation where India is transitioning into a truly global economy, and we cannot afford to remain in a manner that we are not aware of what really is expected of the financial statements. So if we are moving from a colonial mindset that financial statements were only to see how to maximize collection of taxes, that is a thing of the past. Today, financial statements of a local body are intended to measure two important things. What is the service that you are rendering to citizens, at what cost, and what further resources do you require so that your claims with the central allocating authority, whether it is Niti Aayog, various ministries, programs, etc., how they can best be supported with factual data. So this is the changing framework within which we are operating. And this, more or less, I suppose, would be my last slide, which I will touch upon and leave a little bit for some questions in case they are not answered as yet. So in this scenario, what will happen, that I have already touched upon some of the points, that although we look at accounts as something done to preserve accountability, for audit, you must have a proper standard, because after all, CNAG people are also human. You can't tell a person that you go one day to somebody in Uttarakhand, one day to Karnataka, one day to Maharashtra, one day to Meghalaya, where all different rules are followed. So some standardization is necessary. Coming to local body standards as a basic norm will simplify matters for audit, for the auditors also, and for the auditee also, for those who are undergoing the audit. It also helps to prevent unpleasant shocks, because sometimes if you have not actually put your mind to adoption, so suppose somebody comes in as a new mayor or new sheriff or whatever is the organization in each state, and he says, oh, I've got wonderful resources, I am already on accrual and I've got 15 crore rupees, which is receivable. The unpleasant shock is that out of that, 14 crores is in dispute and is likely to take 10 years to decide. So that is not going to come to you. So that sort of unpleasant shock is avoided if you are putting a proper disclosure in the notes. if you are following certain, and somebody will say, to usse acha to cash basis was better. But that is not a solution everywhere. In this example, yes, but in other situations, cash basis can lead to a very misleading picture. So therefore, even that can result in unpleasant shocks, because some cash basis payments might materialize at, like, take for example, huge amount of gratuity. 30% of your employees are set to retire in the next 3 years, and you have not got any provision for gratuity. So where are you going to meet that from? You will have cash shortage in such entities. So that can be an unpleasant shock. It actually means that your citizens will suffer very badly because of that. Citizens in Delhi may remember that when Safai workers went on strike, who suffered? Not anybody else. It is the citizens who suffered. Why? Because there was lack of finance to pay their salaries. So this is something that results in a adverse or unpleasant shocks, not just to the management and the elected officials, but also to the citizens, which is the last thing that you want to see in a progressing economy. It also reduces discretion, and more importantly, what Niti Aayog is very conscious of, it promotes systems and digitization, because now the era of having manual accounts, etc., is gone. One of the great advantages India has is that we are in the forefront of digitization in the world. I can tell you, I have been to certain international discussions, and I have heard people from advanced countries like New Zealand and Switzerland and so on. They are amazed at the sort of progress that India has made. Even UK, some of the discussions that have taken place either in India or abroad, the common thread is that they are quite amazed at the progress India has made. And I can tell you that this progress has been possible primarily because of our strength in computerization and the spread of computer knowledge across the length and breadth of the country, and availability of things like internet, etc. So if you want to make use of that, the situation that each panchayat will have its own method of accounting is gone. The sooner you fit into a system which facilitates digitization and computerization, the better off you are in implementing reform. So that is why, and that is where transparency will eventually come in. So decision making, I have already, that is the next bullet, that it will be a great aid to decision making. Decisions can't be taken in the absence of economic and accounting financial data. So all that is essential. If you're going to be raising bonds, as I mentioned, transparency is one of the major criteria. If you want to raise bonds or raise money from any of the aid agencies, etc., transparency is one of the characteristics on which the body is rated. And therefore, if we say that transparency is the objective, then underlying transparency, the building block is some systematic accounting implementation, which really in effect means accounting standards. But at the same time, let me temper that by saying that, and many people question that you are just promoting accounting standards. Why is that? Not at all. Accounting standards is not the end. I'm not interested that accounting standards should become, applicable across the country. That is not the objective. Objective is larger, that accounting standards bring in an era of informed decision making, of better resource allocation, of greater transparency and accountability. So accounting standard is a part of the building block. If you have got a better brick, famously Winston Churchill had said that democracy is a terrible thing, but tell me some better method. So similarly, accounting standards are troublesome, undoubtedly. But is there a better method to implement the reform that is going to take us to that level of transparency, accountability, and so on, and progress eventually? If that is not so, we have got a ready-made solution. It has got approval and support of the central government. It has got support from various state governments. Is it not time that we should start implementing it? And therefore, it should be not because it is for compliance, as I have said in the second last bullet. it is not a matter of compliance for any state government or any state official. It is more a principle that am I inclined to move towards progress? Am I inclined to move towards a better satisfaction of the requirements? Or finally, am I inclined to obtain finance at a lower cost? And if that is what my objective is, then I need to look at the accounting standards in a manner uh, which will facilitate this. Oh, there is one more slide. I've got a few minutes more. I'll deal with this quickly. So, what are the consequences? I have already dealt with many of them, so I'll go through this quickly. So, good financial reporting is a part of transparency that I've already mentioned. There are data quality standards, which is, we refer to generally accepted accounting practices or accounting principles, which are there. All that we are saying is that if you want transparency, you follow the best practices. Best practices are already codified in the standard, and therefore, this whole move towards adoption is not in order to provide employment opportunities to chartered accountants. It is towards a larger objective. It is to prevent manipulations. It is to enable better understanding, give more comprehensive picture, like I gave you, that at least understand that is your bus service, is your electricity supply covered within the figures or is it not covered? Even that 90% of the citizens, including those in Mumbai, will be unaware if you are not having the adequate disclosure in the notes. I can tell you that in Mumbai they are not included, but for those who are not aware, you need to check in Delhi or in Bangalore how the situation is. Now, Bangalore, I believe that there is some undertaking that runs a bus from the busy market area to the airport. Now, is it run by the municipal body? I don't know. Are those resources or revenues, are those assets reflected in the municipal body's assets? I don't know. Do you know if you're a resident of Bangalore is something that you need to check. So accounting standards generally and accounting standards for local bodies provide the rules to ensure that these are comprehensive, they are understandable, they are reliable, which we have already touched on. The information required is showing a true and fair picture. That, of course, true and fair will come only if you are on accrual basis, not if you are on cash basis, because then the format of reporting will be slightly different, and true and fair cannot persist in a cash basis system. It is true and correct, it will be, but not necessarily fair. What is correct is not fair, not necessarily fair. It could be fair, it may not be. And once all this is done, it will enhance the reliability and give confidence to the reader. So bottom line, the application, again, this is just to sum up the entire, this is definitely the last slide I'm dealing with. So, okay, we moved from saying that transparency is the objective, accounting standards are a means of adopting that transparency. It is a prescribed methodology which is giving you the necessary framework, guidance, principles, all at one place, and therefore it is more desirable than any of the other methodologies. And then, so you achieve transparency. So what happens? Because of transparency, you get accountability, you get data consistency, you get a confidence and potential for raising more funds at lower cost, as I mentioned earlier. So you get all of that because transparency is a fundamental building block towards these objectives. So again, it is one step at a time. The accounting standard lays the basic, then you build on top of that the transparency, and on top of transparency comes better funds, which means better services to the citizens. So it is one on top of the other. And therefore broader economic and social advantage, in the sense that certain lower, that means socially disadvantaged categories of citizens might be given better resources because your data will be able to pinpoint where that is necessary, and so on. Better decision making, improved efficiency in decision making and in implementation of the projects. Obviously, that comes from sound financial management, which is a byproduct of the transparency. Another byproduct is that while it has been considered that age-old methods which were adopted while British were still ruling India have continued in most local bodies. Today, chartered accountants are being increasingly adopted. I have a full lecture in the course on the certificate course on what are the roles that chartered accountants can play. And I devote a full couple of hours on that aspect. So I cannot possibly sum up that. But I can simply say that as a byproduct of this entire process, even municipal officials, commissioners, CEOs, etc., and CAFOs, chief finance and accounts officers, are realizing that there is no harm. People, whether in Infosys or Wipro, etc., they are highly intelligent people. Do they engage consultants still? Of course they do, because specialized knowledge has its own value. Do municipal bodies engage consultants for accounting matters? Very rarely so far. But as a result of this, the incidental benefit is that lot of professionalization is taking place and has taken place at certain places which have progressed well. I believe in Tamil Nadu, Karnataka, Maharashtra sporadically, sometimes they engage, sometimes they don't, but it has been happening. In many central schemes, it has been happening. Again, in a larger lecture, I would deal with that at greater length. But let me say that professionalization has increased, and therefore, the stability with which the government itself functions, I'm not saying about ministry stability, I'm saying the stability of functioning of government increases, and that is ultimately to the benefit of the citizens. So eventually, I would conclude by saying that that is the objective that we are working for. Sabka Saath, Sabka Vikas. If we want that Vikas to be widespread, because there is no sense in 20 industrialists reaching the billionaires list. It is widespread dissemination of benefits, upgradation of civil services, improvement in living standards, which is the ultimate objective. These are all building blocks in that direction. And therefore, while I am not pitching for accounting standards in isolation, I am simply saying that in conclusion, bringing in transparency is also a part of the larger social objective of the overall scheme that the government is envisaging. That is the reason why government is so largely supportive of the initiatives of the institute, because we are part of the nation building process as a building block in the ultimate economic development that we are foreseeing. I think that brings me to the end. I have given the email ID for any specific assistance that somebody would want to have. I think I've dealt with the entire subject. I've also tried to deal with the questions in more or less the manner, but let me take a quick look. Opportunities for CA, I've already mentioned, there are huge opportunities as professionalization increases. The accounting standards are there. The question that is there is, are they currently effective in India? They are recommendatory. They are not mandatory for local bodies and government institutions. However, as I said, there is no bar to your, if somebody says that I am doing something good for my health, no doctor is going to say, why did you do it without consulting me? If you're doing something good, it is always encouraged. So adoption of standards would also be encouraged. These standards are being issued primarily by the Institute of Chartered Accountants and by this committee itself, the Committee for Public Finance, etc. And they are being then ultimately presented to the appropriate government authorities, and their approval is also approval and endorsement, so to say, is taken, and not just verbally. It is by way of a written communication to all state governments and their Ministry of Urban Development or Urban Affairs, as the case may be in every state. The Ministry of Urban Affairs is intimating everybody that this is what the situation is. So there are plenty of standards. I don't remember the exact number. I'm sure you will get that on the website. As I said, if you're still on cash basis, the question is, can you use standards? You can't use entire standards, but whatever is applicable, you can always use. Like you can use the standard ASLB 1 for making a disclosure, even if you're on a cash basis. Cash basis does not prevent disclosure. Cash basis may not enable you to make certain accounting, but accounting ultimately has to be as per the rules framed by the respective state governments. But can the state government say don't disclose something? Answer is no. You can disclose, and ASLB 1, accounting standard for local bodies 1, gives a detailed roadmap for disclosure which you can certainly adopt. So while the technical answer is implementation of accounting standard possible in a cash-based system? Technical answer, no, because all the standards cannot be applied. Practical answer is yes, some of the standards to the extent applicable may be applied even in a cash system. And is there are all these standards required to make proper disclosure in government accounting? I think all of them can actually help in improving the standard of reporting and transparency. As I said in the last slide, ultimately that is the objective to which the government of India, the citizens of India, and institute as a partner in this entire process is committed, and therefore I see no problem or no dichotomy or conflict of interest in any of this. It is all part of the harmonious overall project that we have, and I believe that we are progressing well towards it. I wish you all the best in that progress. And in case there are any further questions, otherwise, I think I have finished my part of the presentation. Thank you. And I believe I'm right on time, 1:01. So I have accounted for the time as well as the questions. Any other questions? Otherwise, back to the secretariat to do the needful.
आफाक सर, अगर कोई और क्वेश्चन है तो आप प्लीज चैट बॉक्स में पोस्ट कर दीजिए. Okay. Thank you, Jayant sir, for enlightening the webinar with your rich knowledge and experience. You further answered all viewers' query in a graceful manner. I hope that all viewers would be benefited from the deliberation for today's webinar. Thank you so much for joining and patiently listening. Have a nice day, everyone.
Thank you. Thank you.